Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpsummit.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look again at the euro currency. Situation here is a bit tricky. As you can see, yesterday's price action initially was to the upside, and it was looked like probably market could continue move high and taking out of these highs and could proceed with this potential stop grabber to the upside, because theoretically this pattern is still valid since market hasn't taken out of this low right here. That was the inside trading session. That again, even smaller session, but here take a look what we now have here. So this is also stop grabber, but to the downside. That's the bearish one. And take a look, market holds below the weekly pivot point. In general, some pressure is growing here since market stands rather tight, and currently it's very choppy price action that now gives us two opposite patterns, one to the upside, another one to the downside. Well, it's very difficult to understand what is going on. But here I would like to show you one moment that could appear on euro currency. So you probably, guys, somebody of you see it as well. I can't exclude that this could be some kind of the diamond pattern or something of that sort, because as I said previously, this move down and in general current price action makes me think that probably the leg down is more probable currently, especially based on this action. So market has made an attempt to continue move higher, move above the weekly pivot point, but has failed. Now it's just coiling inside of this bar, and in fact, if we'll take a look in general, all of this price action stands inside of this candle. In fact, this could be treated as the retracement after that one. And that is our evening star pattern with the divergence. And recall that this in general the top of the right shoulder on the weekly head and shoulders pattern. That could be the reversal pattern, and here we could get the diamond. If this is really true and this will happen, the market should show some splash down, taking out of these lows, erase the stop grabber pattern, but after that we still could get some smaller leg to the upside if this really will take place. Well, on the intraday charts on the 4-hour time frame, this price action now looks like the triangle. So market has formed this bullish stop grabber. Here is the bearish stop grabber with the invalidation point right at that tops. Okay, so market now is calling here. So theoretically this should be the downward continuation pattern, since we have the plunge down, triangle consolidation that could lead to the downward action. So that's a theoretical foundation of this setup. But what we will get in perspective, it's very difficult to predict now, since you can see this price action is rather choppy and it's very unstable, if you could call it this way. On the hourly time frame, in fact, I can't show you anything new. So although both of these patterns, as this ABCD pattern, as this butterfly, now looks not as impressive as it could be, because this is just absolutely non-typical price action for ABCD pattern. So when the market hasn't even hit the 618 extension, turning to some sort of the ABCD retracement, triangle retracement, it's very uncommon for the ABCD development. The same we could say for the butterfly, although we could see that right wing still holds, since due to the splash up, top of the right wing has shifted a bit higher. But in general, the swings of the butterfly still holds. But this one also not very common for development of the butterfly. Surely we could see this more as triangle consolidation rather than butterfly. Well, this really price action that's very difficult to analyze and to say something definite what to expect in the future. From that perspective, I probably could repeat only what I have told yesterday about the potential setups. So if this is really the top of the shoulder on the weekly time frame, market will show breakout to the downside, we will get the clarification of this, and that probably the medium-term bearish trend now is continuing. And since the target of this pattern stands rather extended to the downside, we will have a lot of time to possess ourselves on the short side of the market if this will happen. Well, speaking about bullish entry, well, currently in fact we do not have any foundation for that, except maybe, as I said yesterday, this top grabber on the daily time frame is marked with the red circle on this chart. Because what we in fact have, we have bearish divergence, two bearish patterns engulfing an evening star right at the major 50% resistance, some tight consolidation, now trend is bearish. So in fact we do not have any patterns that could let us to enter on the long side of the market. Maybe we could get some kind of the butterfly to the upside. If this will be the left wing on the forward time frame, market will hold there and start forming the right wing, and probably we could get some upward continuation. But as I said yesterday, I prefer to see some thrusting acceleration above these highs before talking about the potential long entry. So from that standpoint, I personally do not want to take the long position right now. Well, and currently again, guys, so if you would like to trade on intraday charts, you can stick with these patterns. If you are bullish, you could stick with this pattern. I mean the daily bullish stop grabber. If you are bearish, you could stick with this pattern. Place stop somewhere above this high, okay, and try to enter short right of this splash up. So you can see this acceleration to the upside. Well, if market will stop somewhere on this area and continue to move down, well, you probably could make this trade because you have the pattern in place. But in general, for longer perspective on the daily time frame, I do not see much here currently. It's just a tight consolidation, is very choppy price action. But again, as I said previously, I personally feel that I think that bearish development is more probable, mostly based on these patterns, divergence. This is some kind of the consolidation of the plunge down. Market stands below the weekly pivot point, so probably the bearish signs are greater here, at least at current moment. But again, for taking the position in one or other direction, I think that we need some more clarification. Because we see that the market is building energy, that market stands in some tight consolidation, and theoretically this is the continuation pattern for the downside action. But overall action now is very tight. You can see market is changing swings very fast. So move up, move down on the next day. Attempt to continue move higher, plunge down, acceleration, erasing of the whole this, move down, again plunge down. So that is very nervous price action with no effect direction, and I prefer to see the exit from this consolidation before taking some reasonable position on the daily time frame. On the intraday charts, yes, you could stick with some patterns that we have in place. Maybe you will try to trade this butterfly or something. You could do this, but you should understand that with this choppy price action, risk is greater. This is risk is much greater than just trade with the trend development, where you place some position, place the stop above the retracement, above the resistance, and just wait how market will support this trend and continue to move down. Here it is quite another tune. So because market stands in the consolidation, it's rather unstable. It's very sloppy and choppy price action. So that is additional risk. But if you would like to do this, you could trade with these patterns that we have just discussed.